Morning, Steve Free in Chicago with the morning grain comments. Well, I think the last couple of days we're redefining volatility in these markets with the on again, off again, now on again trade wars between the United States and China. Overnight, the President of the United States announced the chance and looking into adding another $100 billion of tariffs against China goods. Chinese foreign minister was quick to add that they would retaliate and use all strong measures against the United States if these new sanctions are imposed. Yesterday we saw a bounce in the marketplace, talk that maybe all this was a kind of a negotiation ploy and that maybe things would not be imposed from the initial tariffs. So the stock market's down, most commodities are down, beans are down about 20 cents, corn down 4, and wheat down about 5 cents. For the week, wheat's up 10 cents here in Chicago, 26 in Kansas City. Corn's down a whopping penny. Beans are down about 25 cents. Meal down $1, and soybean oil is down about 20 points. We also noted yesterday that the market might have traded a little bit of U.S. weather. We continue to see some dryness in the southern plains, cold, wet weather across the rest of the country, and all these things may be playing in the minds of the investors that maybe we'll have a little bit smaller wheat crop and corn crop this year than what the USDA is forecasting in their Outlook conference. On the other side of the coin, down in South America, looks like Argentina's finally going to get rains, but Brazil, at least the southern half, may start drying out, and that could impact their second crop. So anyway, as far as weather is concerned, we're going to have to watch that pretty closely. The trade is looking for a soybean carryout for 17-18, around 574 million bushels versus the USDA's 555. The report will be on April 10th. Looking for a corn carryout at 21.89 versus USDA's 21.27, and a wheat carryout basically unchanged at 10.36 versus 10.34. And we are looking at the trade, looking at an Argentina corn crop maybe at 34 versus USDA's 36, a bean crop of 43 versus USDA's 47, a corn crop in Brazil at 93 versus 94.5 by the USDA, and a bean crop in Brazil at 115 versus 113. So that also, corn numbers in South America could be a little supportive to corn. I think the quote of the day came from one of our consultants who said that trading dynamic weather is a known risk of any ag trader. But there are forecast models that help in the decision making. Trading politics and rapidly escalating trade disputes between the world's two largest economies is virtually impossible. Strap yourself in for uncertainty, heightened CBOT volatility as Washington and Beijing harden their negotiating positions. As always, these are my thoughts and not those of ADM or ADM Investor Services, and have a safe and profitable trading day.